how are trades shaping up in the commodity complex? Manisha Gupta is here with a wrap of that. Hi Manisha.
Thank you so much for that, Ajay. It's a third straight month when you have seen the NAMEX crude oil prices continue to decline. It's the longest decline in last 5 years. It's coming in because of the US production, which is at a 25 years high. Markets are watching out for the OPEC meeting in the next week, where they will be talking about the output. But having said that, their exports have been higher than the decided output, and that is something that has been bringing the supplies on the higher side. While the NAMEX has continued to decline, take a look at the Brent crude prices, which is still holding at around $110 a barrel. So continuous gains coming in for that space because of the geopolitical concerns. The precious metals in the meanwhile have been quite choppy. The markets have been dealing with weakness in US dollar, which has been supportive, and the physical buying in China as well, which has been keeping some support in the prices. But on the other side, it again is about the ETF redemptions and the Fed tapering concerns, which continues to put pressure on this space as well. The base metal prices have seen some further declines coming in because of the Thanksgiving holiday in US. You have seen the volumes continue to decline, and that's giving exaggerated moves as well into this space. So while the copper price is just about holding above that 7,000 mark, you really have to take a look at the aluminum prices, which are trading at around 4-year lows. The global output is expected to increase by 6.2% in this year, and the demand really hasn't matched up to it. So aluminum is one space to watch out for. Very heavy selling is what you've seen in last couple of sessions coming in for that. But how do you trade that space? For that, let's get in voice from N. Prasad.
Of late, gold has resorted to range-bound trading in India with 30,000 mark, trading around it plus or minus 200 rupees for almost about 3 to 4 weeks. It's consolidated, and today is an expiry day on MCX. We expect some volatility to be there, but it is better to buy next contract around 29,100 with a stop loss of 28,900 for a target of 29,400. Silver abundant supply is there, and the international market weakness is translated here also, and today also expiry in that it is making a base around 44,000, but the next contract is around 45,500. One can buy it around 45,200 with a stop loss of around 44,500 for a targets of 46,500 to come in the coming days. Crude has been falling consistently in India due to rupee appreciation as well as international fall. We are near the base bottom around $92, but $90 to $92 is a very big support range in international markets. Anytime market can take support and bounce up to $94, $95. Crude may not have any bullish impacts very soon, but it can give a dead cat bounce. In MCX, it is good to buy it around 5,750 with a stop loss of 5,685 for a targets of 5850.